Yo, what's good, you guys? This is going to be a full breakdown of my entire strategy that I've used to get over like $3 million in funding. So stay tuned for this video. It's going to be a banger. It's going to be pretty in depth. I've been MIA recently. I've been kind of starting an agency as well as trading has just been pretty slow the last like 2, 3 months. So I haven't really been trading at all. But I want to get back and at least post educational content in the meantime because I know a lot of people are trading right now. Just for me personally, I don't like conditions, and I only like trading when the conditions are in my favor because trading is a game of protecting your capital, which is a big thing. So for now, I'm going to be posting educational content because I know it helps you guys out a lot. I get a lot of DMs, actually, surprisingly, about people saying like how much my content has helped. So that, obviously that's a good feeling for me. So I'm going to keep posting on my macro now. I'm going to go sit down, turn on the charts, and show you guys a little bit more of breakdown in depth of my strategy. So without further ado, okay, boys, what's up? I'm back. Had to set up this whole screen sharing thing because I just got a MacBook, so I wasn't too familiar about how to use it, but we're back. So I want to get into some chart views. So this is literally going to be my full breakdown strategy. And this is in my Discord education. This is from a tweet actually, but this is my model, the exact model I trade. Saw this on tweet, but want to repost. Same model every day. So write this down somewhere. This is what you need to know. You're going to look for a liquidity sweep. You're going to look for an expansion move on the 5 to 15 minute. This is expansion move. I'll go over all this again. I just want to get it all out so you can write this down. Tap into a 5-minute or 15-minute order block, fair value gap. I always use a 1 minute as my entry because I think it's the best, or I'll use a 5-minute fair value gap with a 1-minute closure above or out, and then a bonus cherry on top, SMT at the lows or highs. Obviously, you're always targeting equal highs, equal lows. You're targeting the daily high or the daily low every single day. So pretty straightforward. Now, what does that look like in an actual chart, right? So I want to show that really quick with pretty easily like findable things, right? This is things that you look for every single day. So price action hasn't been the greatest the past like month or two, in my opinion. Some people have been trading it, but that's them. I don't really trade it, honestly. I'm thinking we're going to probably run all this low resistance liquidity, but it's whatever. Anyways, so let's go here. I'll show you that it's not just like random. Like this can happen at any time. So we'll go back in time, pick a random spot on the chart. I like here. We'll say it here, right? So again, my strategy. Let's look at it again. Look for the same model every day. Liquidity sweep. Boom. That's the first thing you look for. Every day I wake up, I do a daily bias. I go through the daily, the weekly, the daily, the 4-hour, the 2-hour, the 1 hour, 30-minute, 15-minute. I see what's being respected, what fair value gaps are being held, what fair value gaps are not being held, what lows have been taken, what highs have been taken, especially looking at the session highs. So this is a pretty cool tool, but it doesn't show because it's on the 4-hour. If I was on like the 5-minute, I'll show you once I go down lower. But let's say I'm looking here, right? So this is pretty straightforward. Again, my strategy, nothing complicated. That's why I say anyone can learn this. Anyone can learn this. And I mean that. So here's low, right? And in case you're not familiar with the terms, this is called sell side liquidity because this is on the bottom, right? So anything up here would be buy side, anything down here is sell side. If you're not familiar with those terms, go watch like an ICT video on just terminology. It's pretty straightforward. I don't want to make this about terminology. I want to make it like this is people who kind of already know what they're doing. Anyways, so this is sell side, right? Pretty easily identifiable hanging low, right? So I would consider that our sell side. So this is a 4-hour. So this is a 4-hour sweep, right? So what I would look for is now we have a liquidity sweep. Boom. First step, my mind is automatically, okay, I'm looking for longs. We've just swept a key level. This is a key level. We've just swept this. Now I'm going to look for the next step, which would be a expansion move. So this is like a CISD, a break of structure, whatever you want to call it, right? This is very simple, right? So if I was looking at this, here's our CISD, right? Pretty straightforward CISD right here on the 4-hour, which is great. However, using time frame alignment, I don't have to wait for a 4-hour CISD. That's great for long-term positions, but I don't really care about the long-term. So using the 4-hour, right? But I have a 4-hour CISD, but I don't want to be waiting for a 4-hour close to take an entry because I don't trade that long-term. However, using time frame alignment, which is a theory that all time frames are aligned, right? So what happens on the 4-hour happens on the 10-minute, the 5-minute, whatever, right? Using time frame alignment, the 4-hour to the 15-minute, so you can write that down somewhere, wherever, it doesn't matter. I've talked about this before. So on the 4-hour, I would go down to the 15-minute and look for a 15-minute CISD, right? So if I'm all the way over here, now I want to look for a 15-minute CISD. So we're all the way over here, right? We have this 4-hour CISD, but I don't need all that. I need to find a 15-minute CISD after we get this sweep of liquidity, right? Obviously, this is not normal trading time, so I wouldn't technically have this mapped out. But just for this video's sake, I wanted to find a random example and just show you that it works literally anytime. So here's our 4-hour CISD, right? However, we can get in way earlier than this. So we're going to delete that. Our 15-minute CISD is when we get a, pretty much think of a CISD as an order block being disrespected. So in this case, we're bullish now, right? So I want to see a bearish order block get disrespected. So I would say your best CISD, nothing really here, nothing really here. I would say when this high gets put in right here on the 15-minute, here's a great one to enter off of. So here's your CISD, right? So you can just say it's this one, right? And then once we get this insane closure over, that's our CISD. So we're just going to map that out. Boom, CISD. So here's your 15-minute CISD. Perfect. So now our entry is going to be looking up here. There. So there's our second step, which is expansion, right? So we're going to go here. Our third step, which is to tap into a 5-minute fair value gap, 15-minute fair value gap, or an order block. So if we go back to the chart, we look, okay, here's the 15-minute. We have an order block here as well with CISD, right? So we can wait for an entry, right? And take this 15-minute fair value gap. This could be entry. This would be an okay trade, right? Obviously, this is not normal market hours, so this is not really a trade. This is Sunday, right? So Sunday price action, I would not say this really applies to it. But this is if your bias aligns, right? But anyways, you can still take this trade. That's still, I mean, for Sunday, it's probably not that many points. It's still like a 100-point trade. You can take this, whatever. Take your 100 points. Not terrible. So you could take this off the 15-minute fair value gap. You have a CISD right here. So technically, this is not a terrible trade if you enter down here. And again, I always wait for a closure outside of this. So for this case, I would wait for a 5-minute close above this 15-minute fair value gap, or even like a 3-minute close would work. So your entry would be a little bit up here. Your stop loss could be either the consequent encroachment of this wick, or you can put it at the CISD. Either way, it's not a bad trade right here. 100 points with a 23-point stop loss. So a 1 to 5 risk to reward, which is not bad. This is a Sunday trade, by the way. So this is not the greatest price action, but just to show you that it still works if you wait for this, right? So we've been seeing this more recently. So I'm going to go to a more recent scenario of this happening. So let's go to the most recent chart, which if we just go to the 4-hour, it automatically bring us there. So most recent scenario, let's go to the most recent timing. So this is Thursday, December 19th, right? So this is Thursday, December 19th. Here's a low right here, right? We'll turn on this magnet so we get the precise spot. Boom. So we have December 19th low of the day gets swept on January 2nd. 2025. Crazy. It's 2025, but besides the point. Anyways, so that's putting in sell side. So what do we want to see now? If we're sticking to our model, which is liquidity sweep, right? So you formed your bias, right? If I'm looking at this previous day, I'm already expecting this low to be taken out just because of past knowledge. So if you're in that kind of spot as a trader, you'll realize like, okay, daily bias, like we're holding this gap right here on the 4-hour. I'm expecting us to come down to this low, take it out, and then I think we'll push back up. So sticking to our thing, right? Same model every day, liquidity sweep, boom. So first step, done. Liquidity sweep, write that off, check it off. This is what you're looking for every single day. If you stick to this, you'll become profitable. I guarantee you, okay? This is my model. This is what I trade every single day. So first step is this liquidity sweep, right? Liquidity is just resting lows, resting highs. Here's a daily low, which is a pretty key level. So this key level gets swept. So great. Now what do we look for? Going back to our rules, we're looking for an expansion move on the 5-minute or 15-minute, right? So that would just be a 15-minute CISD or a 5-minute CISD, right? So we're going back. Here it is. Boom. Let's extend this out just to reach it. Okay, perfect. So now we're looking for a 15-minute or a 5-minute CISD. And already I can see a pretty confident CISD in my opinion. Some people might not consider this CISD. I do, just because it's pretty obvious, but I'll go to the 5 minutes to make it even more obvious. 5-minute CISD, which again, think of it just like a break of structure, essentially. It's pretty much all it is. It's just a fancier name for a break of structure. Anyways, so here's that. So we're looking for a break of pretty much all these highs right here. So I would consider, just honestly, I would write my CSD as all these highs just getting broken through, and they're getting held right here. So this CSD holds. So boom, here's your 5 minute, and the cherry on top is a fair value gap, right? There's not really a fair value gap here, right? There's not like a 5 minute, not really a 15 minute as well. But again, time frame alignment. I don't really have to wait for a 15 minute or a 5 minute. We have order blocks, we have everything, right? So just based off this, once we get this CISD right here and the CISD holds, I'd be looking somewhere in this area to take longs. Okay, boys, let's go to a recent time just to see that this works pretty much any day, right? So again, going back to the strategy, what are we looking for? A liquidity sweep. Let me just check if this is recording. We are good to go. We are recording. Hopefully the audio is not messed up. Anyways, so again, liquidity sweep. Boom. Here's the hanging low. Sell side liquidity gets swept. Now, we're going to be looking for a change in state of delivery, which is a CISD. So let's go down to like the 5 minute, right? We could use a 1 minute CISD, but again, it's nothing. Don't worry about it. Doesn't really matter. As long as there's a CISD, obviously the higher the time frame change in state of delivery, the better. So in this case, 15 minute, you can use the 1 minute because of time frame alignment. So the 1 minute would work perfectly fine as well. And let me just show you guys that 1 minute as well. So we get this sweep, right? Because most of the time I'll be trading on the 1 minute anyways. So pretty straightforward here, right? Where's our CSD? Boom, boom, boom. We have a bunch of highs put in. And then we have this high put in. And then we don't really get a closure. But you can consider this our break of the high because this CISD holds as well. So we'll consider this our CISD, right? So here's our CISD, right? Change in state of delivery. We got to close above these highs. Boom, right there. Now, if you wanted to, you could take this as your entry. This fair value gap right here on the 1 minute. Again, my strategy is not complicated at all. It's liquidity sweep, CISD, fair value gap, or order block. And I like these because of the order blocks being held and respected, right? Here's an order block right here. Again, so if you wanted to take this trade, this is what you would do. You go long off of this close, stop loss below this low or stop loss below the order block. You enter, and where are you targeting? What are the rules? Target equal highs or daily highs or daily lows. Here's the daily high up here. Let's target up there, right? Boom, target. You can even target fair value gaps in there. Whatever it may be, it does not matter. This is 180 points. So you can take your 180 points and run, or you can keep holding. It's up to you. I always look for a 1 to 3 minimum, and this is about a 1 to 6. So I'll take a 1 to 6 any day. Anyway, so yeah, here's your order block being held. Here's the CISD. Here's your fair value gap being held. You can even enter off of this inverse if you wanted to, right? So if this was your entry down here, I know a lot of you guys are probably inverse traders. And a lot of you just take liquidity sweep, inverse fair value gap. And it works. If it works, it works. In my opinion, I need more confluences to take a trade. But some of you guys will just long after this bearish 1 minute gets disrespected, which is not a bad trade, honestly. You just go, here's your entry. You enter off of this candle. Stop can be below the order block or even below the CISD. Doesn't really matter. And then you're targeting whatever, this fair value gap. So not bad trades. But again, my strategy, super simple. I have it written down right here. Saw this on a tweet, but this is my same model. I have it right here. I also am making a new one too. But it's just same model every day. Liquidity sweep, expansion move, meaning a CISD or a breaker structure. Pretty much the same thing. People are just rebranding all these terms to make them seem cooler. But pretty much the same thing. Tap into a 5 minute fair value gap or order block. This can be interchangeable. It doesn't have to be a 5 minute every single time. It can be a 1 minute, a 3 minute, a 5 minute, a 30 minute. But I'm always waiting for a closure. This is the most important thing if you don't get anything from this video. And write this down, is always wait for confirmation off of a fair value gap or order block. Never just set a limit order right here, right? Like watch, if I'm going, let's go to replay. What some people do is they'll set a limit order in here, right? They just set a limit order and then let it play out. I always wait for confirmation, right? So if we let this play, I'm not entering until this candle. Like I'll probably enter off of this candle. And I'm not gonna lie, once I see this, I'll be a little bit scared. But I know that my stop loss is protected, and if it gets hit, then that means my trade was wrong. Okay? It means I was wrong, my bias was wrong, the entry was just wrong. If it doesn't get hit, that means it was a good trade, my stop loss was correct, my entry was correct. Couldn't have been any better. So you want to make sure that you always have a protected stop, protected entry, right? So that's just a little breakdown. Again, that's what I trade every single day. It does not matter. I'm telling you guys, it does not matter. Simple. Liquidity sweep. Look for a liquidity sweep. Once a liquidity sweep happens, your brain should automatically flip. And what should it flip to? It should flip to the opposite side. You should now target an opposing draw, meaning fair value gaps, which are imbalances, or even, highs or lows. Right? In this case, fair value gaps probably would have been your best bet. Or worst case scenario, you can go for the equilibrium, which I talk about in my TikTok and Instagram videos. Is equilibrium is a very untapped thing that people don't really talk about, because a lot of time you'll see after a big move like this, you'll see a range back to equilibrium. So you can always take the opposing trades to that range, which would be equilibrium. In this case, equilibrium and fair value gap. Some people will short this. That's why I say always wait for confirmation. Because some people do trade equilibrium and they'll see this. Oh, this is a key. This is a A+ setup for equilibrium, taking shorts back down to this low that was over here. This low right here. This LLR right here, right? They're going to try to take shorts of that based off of this equilibrium. Always wait for confirmation. That's why I'm saying if you don't get anything out of this video, just wait for confirmation on entries. Meaning if you tap into a 5-minute fair value gap, at least wait for a 1-minute close outside of that fair value gap, showing that the fair value gap wasn't de facto respected. Or again, like inverse fair value gap traders, you guys always enter off of a closure that disrespected the fair value gap, right? So why don't you do that for normal fair value gaps in normal order blocks as well? I don't know why people don't do this. I think they're just too trigger happy to get into a trade. But doing this has literally increased my win rate by like in crazy amount. I don't even know, like 20-30%, which is crazy in trading. You guys don't understand, like having a 60% win rate versus like a 70-80% win rate is like an insane difference. So yeah, just test it out for a couple trades, see how it goes. You might get later entries, right? But you know that they're safe entries. That's what all trading is about. Having safe entries, protected risk. Even if they're a little bit late, you just know that you're going to be in a safe trade and that it will actually work out in your favor. And if it doesn't, you know why it won't, right? So trust me, it saved me a lot of losses that I should have not have had, because I didn't wait for a closure. I would just enter, I would put a limit order in a fair value gap, and then I would just get stopped out. So just wait for closures. Honestly, it's like the best thing ever. I don't know why people don't do it more. Anyway, so that's just a little bit of a breakdown of my strategy. Again, pretty straightforward, same model, just liquidity sweep, expansion move, aka CISD, or breaker structure, tap into a 5-minute or 15-minute fair value gap. Again, this can be interchanged with 1-minute, 3-minute, doesn't matter. Any fair value gap, any order block, look for it. 1-minute inverse fair value gap for entry is okay. I don't necessarily do that every time, but I would say my best entries are BPRs, which is an inverse fair value gap, and a fair value gap overlapping. Those are great as well. But then your targets can be imbalances, equal lows, equal highs, daily highs, daily lows. Doesn't really matter. So that's just a quick video. I need to go edit this now and post. I haven't been trading. I haven't been active. I know I'm annoyed at myself as well, because I know actually, surprisingly, a lot of you guys do find value in some of my videos. But let me know in the comments what videos I should make next, because I do like going over my strategy, because I think it's super beginner friendly, honestly. Like once you start learning ICT concepts, this kind of just compiles all of his best concepts into a singular strategy that they all stack on top of each other. There's a bunch of other things like standard deviation, equilibrium, that I didn't really talk too much about in this video, that I also use, but not as much. But with the upcoming, what I think is going to be a bull run, standard deviation will be your best friend, because it's going to project profit targets for you that will make you a lot of money. So if anything, I'd say, yeah, let me know in the comments what you guys want to see next. I'm down, honestly, to make any videos. I need to start getting back into it. Anyways, I haven't uploaded on this YouTube channel in like forever. So this is kind of just didn't really plan too much out for the video. I just wanted to go over kind of a strategy. that I've been using that has been working really, really well recently. Well, not in the past like 2, 3 months because I haven't even traded in the past 2, 3 months, but prior to that, it was working really, really well, and I'm still seeing it work today. So I'll get back into the groove of it, and then yeah, just let me know in the comments what videos you want to see next. Any recommendations, because I am an open book and I want to help you guys out as much as I can. So with that being said, I will see you guys in the next video, and please remember, wait for confirmations on those fair value gaps, and I will see you guys.